Hello everyone, Dividend Enjoyer here, and today I'm going to be doing a stock analysis video on Equinix, ticker symbol EQIX. Equinix is a data center real estate investment trust, or REIT, that provides the physical infrastructure for cloud computing, AI, and the internet. They own and operate over 250 data centers worldwide, offer colocation services where companies rent space for their servers, provide interconnection services, allowing businesses to directly connect to cloud providers AWS, Azure, Google Cloud, and other networks. They benefit from AI, cloud, and digital transformation trends as companies need more data storage and faster network access. Essentially, Equinix is the digital landlord for the internet, helping companies scale their IT infrastructure efficiently. Now, I don't know exactly who's going to win the AI race. I have a guess. I have some money on it. Obviously, I want it to be Amazon, Meta, and Microsoft because I have holdings in all of those companies. But nobody really knows for sure what's going to happen in the future. But I think a very safe bet is Equinix making more money over the long term as computing, I guess the demand for computing power becomes bigger. Equinix is in a, strategically kind of interesting place where they can make a lot of money as long as things go their way. Now, the stock is very interesting because it trades for $913.66 as a market cap of 88.16 billion and a price to earnings ratio of 82.34. Now, that price to earnings ratio tells me that the market also believes that there's going to be a lot of big growth, so expectations might be too high for the valuation. I haven't completed the DCF yet for recording this part of the video, but the company looks very interesting. It looks like not any kind of REIT that I've ever seen, and I would want to own this if it's undervalued. If this is undervalued, I will probably be adding this to my own portfolio because it's such a niche and interesting stock, but it also serves as almost the telecommunication type of company of the future. I think that this is going to be a long-term dividend cash cow that's just going to pay you forever to hold it, and that companies are going to need their services for a very long time. But you have to, take a look at the valuation and see if it's overvalued for what you expect growth to be. I also want to add that they do pay a dividend since they are a real estate investment trust of 1.87%. Now, this is lower than most other REITs, but it makes sense because a lot of the valuation is probably baked into future anticipated results. So this is a really interesting company, and I can't wait to get into the actual DCF portion of the video, which should be coming up next. Here's my weighted average cost of capital for Equinix. I have a cost of debt after tax of 2.107% and a cost of equity at 6.27%. For my weighted average cost of capital to be 5.58%, they're currently 16.53% debt weighted and 83.47% equity weighted, which is significantly higher than most other real estate investment trusts, but this is obviously because they are a data center real estate investment trust, so they kind of get some, leeway there. For the free cash flow model valuation, I have a fair value with a 20% growth rate of the free cash flow, keep in mind, of $859.33. But that's not really where it ends because I was very generous with how I modeled. I actually took, I multiplied by 1 times the highest free cash flow rate, which was the 2022 one, 1.0945 up to the second power because it's 2 years prior to the trailing 12 months. And I also took that 9.45% as the revenue growth. And even then, modeling this out, it's still overvalued. So I think the stock is, priced very highly. And if you're going to be buying this stock, you really need to be very scrutinous of it because the price demands that. I actually like Prologis better than this on a price standpoint, but I do think that there are some shining star moments of this stock. Like I talked about, the average revenue growth being 9.45% a year. You have lower debt to equity ratio than a lot of other stocks. And just fundamentally, I think that the demand for computing power is going to be crazy. And when there's a shortage of a supply like this, then the price is going to increase. And I think that's what Equinix is trying to get ahead of. I think that they're trying to build the infrastructure up as much as possible and put as much money into building the infrastructure up as they can. And that's why the free cash flow has just dropped, because they're putting so much money into making more assets and into building up their computing power. And I actually think that this stock is probably slightly overvalued, like my model says. I think that the price is ridiculous. I think that there may be a time when this is undervalued, but, I also want to say that there is a chance that this could be undervalued right now, just because of the fact that it's in a sector that's growing at such a high rate, and they have something that everyone with a lot of money wants. So if you have something that people with a lot of money want, they're willing to give you some kind of money to use your service, right? And that's where I think Equinix could break out, but the current price is just too ridiculous for me to entertain it, even if this stock shoots up crazily, which it very well could. It also could be stagnant for a few years and then jump. It also could go down in the short term. I don't know what's going to happen in the short term, but this stock, I think, is, in a very good sector. It's a very strong business. From where we're looking at the current AI landscape, but the price is just too high for me to justify, and I can't recommend anyone buying this company at the current price. I think it's too high of a price for what it is, and I think that you'd be better off avoiding this one and going for something that's maybe priced a little more appropriately, because this is a 20% growth rate of the free cash flow on average for the next 9 years, and it's still overvalued. And I also kind of fudge the numbers with the future free cash flows. So, this model is like overly generous for Equinix. And I think that when you're looking at companies, you need to be extremely scrutinous, even if you like the business. And I just would not recommend anyone enter into this. I think there's too much risk associated with how much money you're putting up front. And there's just too many ways that this could not work out. I think you'd be better off buying a different real estate investment trust if you're trying to get dividend income. I think that if you understand the data software kind of space and the AI space, you could definitely do more research, and maybe you could justify this. Maybe there's something I missed, but from a valuation standpoint, this stock looks extremely overvalued, even though I like the business a lot. And I think that it looks overvalued because there's a lot of growth that's going to be happening in this stock. And then once they have that infrastructure built up, they will be able to pay a pretty solid dividend over time. So if you're an investor that's, waiting 10 to 20 years for dividend income, this might be a good stock to actually add, because you're probably going to get pretty reliable growth. But the cost that you're paying for that is at a premium right now. And I think the whole market recognizes that. And this is probably going to be a good stock in 10 to 20 years, but it also could be a really good stock in 5 years. I just think it's overpriced for what it is. I think it's a very interesting play, and I'm really glad I looked at it, because I didn't even know that this company existed with such a big market cap, and there's probably a lot of people with eyes on this company right now. Hence the high PE ratio, hence the high valuation. I think that there's a lot of hype behind this stock right now. And, again, I'm not going to touch it, but let me know what you guys think in the comment section down below. I really enjoy making these stock analysis videos. Please check out my other stock analysis videos if you're interested. Please hit the subscribe button too if you've made it this far. I really appreciate everyone who's subscribed to the channel. We're at 128 subscribers right now, and we have just an awesome community in my opinion. So thank you guys.